Okay. It was difficult. I think I've been live for a while and I didn't know it. So if you're seeing this just now, I apologize for the delay in getting started. It was just working with a little bit of different kind of software here, and um, I'm on Facebook and YouTube now. So that was a little bit of the challenge. So if you're watching me on YouTube, welcome to my YouTube channel. If you're watching me on Facebook, as part of my my Facebook page, my consulting page, then welcome. You know, I've been away from Facebook for a while, and now I'm back. Today we're talking about like a very interesting and very disconcerting episode that I had to experience over the weekend regarding a very specific gold trade. But before I get into that, let me just summarize a lot of the positions that I have open. And we'll start off, going down the list. We'll start off with the Dow. I've been scaling into this position since somewhere down here. I don't remember. And part of what I have to say about gold and something that was a little bit of a learning lesson and a very surprising kind of a bad news is related to why I mentioned that this entry keeps popping up as I scale into positions. It's something that I didn't really fully understand, but now I do. And the way that they explained it to me was very poor. They explained it to me very poorly, and I had to kind of figure it out by doing the math myself, and I finally understand it. And in retrospect, I think I can let it slide, but it did make for a very it did lead to a very strange trading day where I was not focused on the trades itself. I was more focused on like trying to figure this out, so it was definitely a bit of a distraction. And for me, like, for today, I think it's okay. I think I'm gonna be okay with this being a little bit of a distraction. And I didn't have a very good trading day, and I also don't know what my P&L is for the day because it's all kinds of messed up. And I'll get to what I mean in a second. But first, let's just summarize the trades that I'm in and I'm holding overnight. I have my Dow that I've been scaling into, and you can see some blue arrows that I've been scaling in all the way since, back here. I think I got in at the 27,175, and I've just been scaling in, and this is what's been keeping me somewhat afloat. This has been the only thing that's making my losses not quite as bad and a little bit more respectable. I don't have anything on the Russell, but I do have a position on the natural gas. I did take the opening range, and that is gonna look something like this. Where was my opening range here? I took the so here's the thing with the natural gas. It was very strange because the opening range was very weak. It was very small. As you can see that it's green. Let me change this into my usual orange here. Okay. So here's my opening range. It's one tick. It's one tick, so that's not usually enough. I need to give more wiggle room than that, and it was just the so I don't know what I took my stop as originally because I did end up moving it down, but you can see that the trend is a downtrend, so I took it as it broke down below that, and I did not take the long, even though it did break above. As you can see here, it did break above. Let's just get rid of that. it did break above, and this is just one tick here. It did break above, but I waited till it broke below, and I was in. I guess I was in here. I let it go a couple of ticks below this, and so I'm in at the 2.2, and I let it go throughout and let it hold throughout the day, and I guess, in retrospect, I could have taken profit here at the 2.125. Would have been ideal, but I didn't, and it's starting to come back on me. So if it actually ends up popping me right here at this at the trailing stop that I set, I'll lock in something like 80. I think I'll be locking in like 50 or $60. Like nothing too crazy to write home about. But I guess I'm letting myself get stopped out. So I think what I want to do on these opening trades is, at least if I can afford it, which in this case I definitely can, because the risk is so small, that I would take multiple contracts and have multiple targets instead of just the one trade where I'm holding it until the end of the day. I got in on the pound. I'm taking this, so it's just, let's make this a little bit more less noisy here. Let's just look at the 4 hour chart. Let's see. On the pound, I am bullish on the European currencies, both the British pound and the euro. However, I am looking at taking the short because on the 60-minute, there was a nice little, maybe it wasn't 60, maybe it was 15. There was a nice little zone here that I wanted to take on the 3100 even, and I wanted to take that down. It's so strong and fresh that I wanted to take that back down, at least to the 3025, which is where my target is, and I should probably set that right there. Okay. Okay, that's a bracket. So let's modify this. Okay, and make that 25. Okay, so that's what I wanted to have happen, because I don't want to take it anything below this. I want to start taking it long anywhere from the 3025 to the 3000. I want to take it back long because I am more bullish. This is just I'm taking a shot on the retracement, which is why I only have one contract. Moving on to the euro. Euro, I actually didn't expect it to come down. I actually thought it was going to do a little bit more, a similar move to the pound. So now I'm in a little bit of a conflict because I am long the euro but short the pound. And that's usually not a good thing. That's usually you're working against yourself. Right now, as you can see, I'm moving down here. I don't know if I want to keep this or not. One is in profit and one is not. And so I want to maybe clear this out of the way when the market opens up, so that I can give myself some breathing room and some peace of mind on the trade that I think is going to work out better, which is the pound. I took a shot at it. I didn't quite expect. I placed both orders on the short on the pound here at the 3100 even, and the long on the euro, which is the opposite kind of position at the 1750. I did not expect both to hit, to be honest. And when I came back and I saw that one hit, they each hit, I was like, now I set myself up for a dilemma, and I don't know which one to pick. I'm probably going to take the profitable one and get rid of this as the market opens. Wheat has just been driving me pretty crazy here because it looks like it wants to break above and then it doesn't. and then it looks like it wants to break above and then doesn't. It's just been like a very choppy day, back and forth in my wheat trade. And usually I don't trade wheat. This was an idea from someone else. So, and this is a very expensive full-size contract, so I don't actually have the luxury of, I don't quite have the margin for this. So, this is something that is not exactly a good habit, but to me it is a business decision to kind of ruin my own risk reward and take profit like when I can. If it goes to break even, I just want to get out of this trade for a minimal loss, and I do believe that there's enough room for it to at least get me my $75 back, and maybe a little bit more, maybe another. If I go a full 2 points, that'll be $100, right? And it does look like it has room for that before it breaks down further. I like the RSI is so low, and it doesn't see. There is technically some divergence here. If you look closely on like a 2-hour chart, it's easier to see. There's a low. Here's a low. Here's a lower low, and you see that the RSI. Here's a low on the RSI. Right, and then here's a higher low on the RSI. So there is a part of me that thinks maybe I should just let it ride because, give it a chance. But I don't know. I'm really iffy about it because it's eating up so much margin for not enough of a reward right now. So those are the trades that I'm in. I'm holding a lot overnight, and I'm not too keen on that. That's usually when the cliff can fall out from under me. But today's video really isn't about that. Today's video is really about something that I had to learn about TradeStation and about how they balance their books. And I guess this is something that I've been knowing that I needed to learn for a while, but I had not really, I wasn't pushed to learn it until this past weekend. And so what happened was, and if you trade TradeStation futures, you might, if you have a different broker, this might not apply to you. But if you have TradeStation, this is definitely going to apply to you. And if you already knew this, then you'll probably laugh at me for not knowing. It's like a novice move. But I'm admitted amateur, so I am not going to sit here and pretend that I am really good at this yet. I'm still learning. So here's the thing with gold. What happened was, you can see that I took a lot of trades here, and it's just I win one, I lose one, I win one, I lose one. I don't know if I'm winning or losing overall here. I just know that I want a position in gold, and then what happened on Friday and over the weekend just put me in a little bit of mental distress, because it felt like the broker had TradeStation had taken hundreds of dollars from me, and that's what they made it look like. And they didn't, which is the good news. But they also didn't do a very good job of explaining and clarifying why. So I have to figure it out by myself. Otherwise, I wasn't going to get over this. And so that's what I spent the day today doing, and I finally figured it out. So here's the situation. That you can see that I have multiple buys and sells here. And so what they do is, even though I actually had, I shouldn't have taken my zone out of here. So I took the price, I took a buy somewhere here at around 2020 or 2030 or something like that, right? Because you can tell I got in long right here. Now, you can see this was on Friday at like 1:15. I got picked up on my gold position. I'm like, okay, good. I went in, I'm long gold. And you can see as of August 9th, which was yesterday, Sunday, price came back down and would have picked me up again, and it started moving in my direction. But it didn't what it showed was, and I wish I had left it. I wish I didn't move my stop and get stopped out. I think I made a little bit of a profit, but I wish I had left it so I could show you exactly what I meant instead of having to explain it. So that's my mistake. But what happened was that even though I took the long from, let's say, right here, right, they, in which case I'd be showing profit. They calculated as if I had taken the long from the highest price the day before, which was up here, let's say, right? See this blue arrow, which means I was also in a long up here at some point, somewhere around, let's say right there, right? So they displayed on my chart as if I was in a long position at 2079, let's say, and that shows like a negative $300 P&L, right? That shows a long position that I'm down like hundreds and hundreds of dollars, because this is gold, so it's pretty expensive. So this is hundreds of dollars of movement here, on the micro, right? Just make sure that you understand it's the micro. So I thought that was a glitch or something like that with the broker, just settling their books over the weekend or something. So I waited until Sunday when the market opened to call in and try and get that clarified. And what they told me, quite rudely, I might add, the customer support was not good. So I'm just saying that publicly right now. TradeStation, they are, it's easy to get to connected to a person, right? So in that sense, the availability is good, but this person in particular was quite rude and quite incompetent in articulating what the answer to my question. So I am going to do his job for him, basically, and clarify what in layman's terms, because he was using all this techno jargon and trying to confuse me and make himself feel better, maybe, and sound smart. Or maybe it's his that's just the way he's trained to answer questions, because a lot of these guys are just they're just reading off a book, or they're just referencing a manual. Apparently this is a very common concern, and I don't understand why they make it this confusing, but I think they're just being transparent. I think that's the reason. I'm trying to give them the benefit of the doubt here, but what they ended up doing was they will show, even though I am in the position at this price, they will show it as if I'm entered in at this price. Why? I don't know. It's just how they're calculating their books. Now, does this mean that they took money away from me? I went back and did the math. It doesn't. I don't think they took any of my money, because like that would be illegal, right? You can't just take money away from me because I'm holding a trade over the weekend. That doesn't make any sense. But the way they display the number is like, oh, instead of being in profit, I am now at a loss. And the reason they do that is because of this right here. What happens when I hold a position into the next trading day, which is exactly my situation, holding it from Friday and waiting till Sunday, and it says the highest priced trade contract, whether long or short position, will be carried forward from one session to the next. When clearing futures trades, TradeStation matches up the lowest price buys and sells from the prior trading session, leaving the highest price remaining contract to be carried forward. This methodology has no effect. This is the important part that he failed to mention to me, and he was very rude. He was basically saying like, "Hey, I got to get off the phone now. You've taken up too much of my time asking questions that you can just go on the FAQs and figure out yourself." Very rude. But this methodology has no effect on the net worth of the account, which is the important piece. It has no effect on the net worth, but it may affect the unrealized profit loss for the next session. So it's calculating, like you still have, I still have my same kind of like bottom line account balance from last week. So last week, just to sum up very quickly, I basically made no money. right? I had a really bad start to the week, lost, I was down hundreds of dollars, and then I made up for it in the week, and I basically broke even for the week, which is not what I want, but whatever, I guess I made my money back, right? So my break even for the week puts my balance at around like 60 $6,300, right? Because that was how I remember, that was how I finished the month of July, right? And last week was the first week of August. And so I actually, at least I remember those things mentally, right? Without having to like dig through my statements or anything like that. So what I noticed that my net balance didn't change, but a swing from I being up $300 at the end of Friday, and then seeing negative $300 on Sunday makes me feel like I lost 600 something dollars, right? And when I looked at my net worth, I did not lose 600 something dollars. It was just that the way that they're displaying and calculating and settling the plus minus is calculated from places that were not. I'm used to something called first in, first out, which means the first position you started with is the first position you exit. But TradeStation doesn't do that. That's what I'm used to from my Forex trading, which they enforce that, but that was a different broker. This broker, TradeStation, does not do that, and it really doesn't affect your bottom line, but it is very confusing if you don't know what you're looking for to calculate my daily P&L. So, which is why it's hard for me, and I may have been reflecting technically incorrect P&L on a daily basis, but ultimately I'm at the end of the week, at the end of the month, I am tracking like what I'm actually making and what I'm actually losing very accurately. Again, my process is to not obsess over the balance sheet. For me, I'm still learning. I'm still a beginner. I still need to perfect my process. So that means that I am taking. I'm obsessed with the process, not with the balance price. But this is part of the process. I didn't care so much. Once I recognized I didn't lose, that TradeStation didn't take $600 from me. Once I recognized that, right away I felt better, but I also felt compelled to understand, okay, this isn't going to change. I can't continue to get confused and not understand how TradeStation balances their books. So I just had to figure it out, and I just kind of watched. And I wasn't really focused on trading today. I took opening range on oil, and it was profitable, but I didn't even know. And then I took a loss on the S&P, I didn't even know. Which, by the way, I think I like, because I turned notifications off about whether I'm in a trade or whether I'm stopped out of trade, took profit, whatever, whether I'm in it, trade entries and exits. I turned the notification off of it because it just makes me. Because the notification freaking owns me, right, on my phone. When I hear it, I'm like, oh my god, what happened? Did I get in? Did I lose money? Whatever. And I turn into it's like I'm conditioned, like Pavlov's dog, to check it and obsess with it, and it's inefficient. It's an inefficient use of my time, and if anything, it makes me mess with trades that shouldn't be messed with. So today I didn't trade very well. I didn't manage my trades very well at all, because I was not in, my head was not really in the game, which is why I'm in these contradicting trades right now, and the market open. So I'm probably gonna do this right here. Ready? I am going to just take a profit. Give myself a profit of 5 pips, something. Okay, and I can cancel that. Okay, so hopefully that'll pick up and just at least give me back my contract. Now, this is a very bad habit, because look how terrible my risk reward ratio is. But right now, the point of this isn't to actually take a profit. The point of this is to just get out of the trade immediately, and I'm just kind of pushing the envelope just a tiny bit, just to make up for the the fees, right? Whatever that may be, right? It's like a few bucks. I don't even know. It's one contract on a micro. It's like it's nothing. It's nothing. I'm looking for this to work. I'm looking for my pound to hit at least the 30.25, and then I'm gonna decide, okay, do I want to take the long from here, or do I want to take the stronger 3,000 price? I don't know. I mean, we'll see. I have to see what happens with this. So what I know is that with all that being said, just to reiterate on the Dow here, even though you can see that give me some arrows. Okay, so even though you can even though you can tell that I was in a long position all the way down here. I added another contract and took a profit at the same time, which is a way of, for me, it's a way of saying, okay, I'm gonna take one contract off and add another one, so I'm still in for two contracts, but I book profits in my belt, right? So it's like I still want to be in two contracts, but like I staggered it so that, you know, I lock in profits in my pocket, right? So in a way, now that I understand how it works with TradeStation, in a way, it actually now I know actually how to make that work to my advantage for situations like exactly like this one on the Dow, where I'm scaling into positions. So this is actually something that I can actually benefit from. It took a like a really stressful kind of Sunday and Monday to remember it, but at least this was a new lesson learned for today, and I can't really complain about that, because now I know, right? And that's the point of this whole journey, is like, you know, these skills don't go away necessarily, right? And so I'm glad I learned what I did. I learned how another broker tends to balance their books, right? So this was a good experience, even though it was painful. So that's it for today's video. Not really so much about trading, although I have a ton of positions open. That was not my intention. Today I wanted to make a video about sharing with you, understand how your broker operates, right? That's part of trading too, like, because different brokers will operate, and I balance their books and settle their cost basis in very different ways. And if you don't know, you might end up getting stressed out, and getting stressed out is never a good thing for your trading. And so that's take a lesson out of a page in my book, and you know, learn from my suffering, and you know, I hope everyone else recognizes the need to understand how your broker operates and settles their, you know, cost basis and settles their books and stuff like that. So you don't need to like stress out about it the way that I did. Learn from my mistakes and avoid it for yourself. Call your broker and ask how it works. But until then, hopefully tomorrow will be like a starting fresh kind of a trading day, and we'll hopefully the Dow continues to go up. You know, that's really my crown jewel right now, and those are the moves that I'm trying to see. I got stopped out for gold for basically a break-even kind of situation, so even though I'm bullish on it, we'll find out what happens. Tomorrow you might see me have another position, and I'm going to start, especially in situations where it's applicable, like the Dow, where my entry price starts to move up and up. I will start explaining some of the math as it becomes more natural to me. Right now I'm still starting to get used to it and everything. So that's part of the game that I didn't know I should be talking about, and now I'm going to be implementing it, because I do plan on continuing to scale into positions. So I hope that you learned something from me too, And for now, just trade safe and be safe out there. Hope everyone is healthy, and we will. Oh, I have questions. I didn't know that I was even looking at questions. Sorry, Facebook people. And well, I did not have that up in front of me. Casio Eduardo, I do use price action for trading, absolutely, and Kevin, do I get much slippage in Omar? What are you doing here, Omar? Kevin, do you get much slippage on the microcurrencies on TradeStation? You know what? I don't know if I want. I don't know if I can really comment on that in terms of slippage, because I know like you have to reconcile that with the amount of like with the spread, because in futures the spread is built in to the price, because you don't get any kind of or rather the interest, whether you pay interest for to hold the currency or whether you get paid interest to hold the currency, is something that is built into the price. So you're going to see a little bit of a spread there. So it's hard to say, because there will be a discrepancy in whether you're doing spot forex versus futures, and you're gonna. I don't know if I can say that that's slippage per se. Usually, usually the way to avoid slippage in futures is to make sure you're at the highest volume month, which I've screwed that up before. You know, with the gold, you might recall from last week, I was trading the October contract, which was a bad idea, but it wasn't. It was still in middle of transition, so it wasn't that terrible yet. And if you were and when it comes to currencies, it's even harder, especially if you're comparing to spot forex, because there's the interest rate that gets calculated into it as well. So my comment on this, so like I'm kind of like formulating my answer for you, Kevin. I think that in forex, it's gonna be a better deal, because there's more liquidity in spot forex for the majors, right? Which is what this is. The euro pound, the euro dollar and the pound dollar are the majors. But here's the thing, like, I don't know if you recall, I'm talking to Kevin specifically now, but I have taken some trades on like the Mexican peso in futures, because the ridiculous spread that you see in forex doesn't exist in the futures. So Mexican peso actually becomes very tradable, because you don't get that ridiculous spread. It's just like whatever 85 cents in and out per contract, right? So that kind of makes the David's whole thing with Mexican peso being so ridiculous, and some of these exotic currencies a little bit more ridiculous. It kind of takes that obstacle away, that objection away. So Mexican peso, I have taken some trades. I haven't really I didn't win any of those trades, but whatever. Like it wasn't really my idea. You can see it's not actually on my watch list. I don't have Mexican peso there, right? I'm not really that familiar with it. I don't really have the fundamentals to it. The only time I trade it is when better traders than myself recommend it, and it actually I just take their pick. That's it, and I just like hope for the best, because I just respect their pick. So that's really it. So yeah, sorry I wasn't actually paying attention to the fact that I had Facebook comments in. Thank you for commenting. I really appreciate that. Also, if you're there, consider following me on my YouTube channel, which is at yoon.tube. You can just type that into your browser and find me there and subscribe, and you can find me in either place. So whether it's on Facebook or on YouTube, because I am now able to broadcast in two different places at once, which has been my goal for several weeks now, and it has been very difficult. But I finally pulled it off today, and so glad that a bunch of you have been able to hop on and engage and chat with me. Sometimes I get a little lonely talking to myself. So thanks for joining, and I will definitely see you tomorrow. Hopefully tune in again tomorrow around when markets close between 5 and 6. And until then, stay safe out there, and see you tomorrow for another episode of my trading vlog on YouTube. Thanks, everyone. Bye.